And from that date, 6 months out puts us in May or June of 2023. And 45%-ish from approximately when it happened puts us just below 10,000, around that 9,000 marker. Now, there is always the possibility it could go even lower. The worst case would be like 3,500 on Bitcoin, and then it would match up with Amazon's collapse in the .com. Amazon dropped 95% in the .com collapse, and that would put it on par. But that would be like if you don't get regulation, crypto to me is almost like a dead asset, unfortunately. And so it's a big deal. You have to have it, because otherwise big money's not coming in, and then you're not getting Bitcoin to 100,000, you're not getting it to 1 million and so forth. If you get transparency, I really do believe it can go there.
If you are still looking for a positive Bitcoin price prediction for 2023, this may not be it. In fact, for the first time, Chief Market Strategist from InTheMoneyStocks.com and VerifiedInvestingCrypto.com, Gareth Soloway, is predicting Bitcoin may even go as low as 3,500. We know how scary it is to hear this, but there's a reason why Gareth believes that Bitcoin can drop as much as that in 2023, and at the end of this video, you will understand everything. First, look macro to get a clear picture of what's happening.
So I think investors have to recognize that, the labor market has stayed strong at this point, but I do think that there's a cliff dive coming in that sense. So I do think the Fed will hike at least one more time, probably in early 2023. If we look at the symmetry of their moves, they did a 25 basis point hike, then a 50, then 475s, and they've done a 50. So they're almost coming down the mountainside, where it leaves them at least 25 more basis points. I think that one of the reasons why the labor market has stayed so strong is that businesses, and generally small businesses, have been very reluctant to lay people off because it was so hard to find employees, right? So when you struggle to find employees, which is what happened over the last year or two, you're very, hesitant to say, okay, well, the business is slowing right now, so I'm just going to lay everyone off. You say, well, what if it picks up? How am I going to find a good quality employee again? And so I think that's what you're dealing with right now, which is why the labor market has stayed so tough. But I do think there will be a point where even small businesses, and we've seen this, we've seen Meta lay off a ton. We've seen Google announce layoffs. I mean, the big companies that understand business cycles, they are laying off. It's just waiting to come to the small business side. And I think in 2023, we're going to see that. And the Fed will basically stop hiking rates after one or two more hikes. Now, the key here is this, is that the Fed, because they were off sides and called inflation transitory, and they got behind the curve, they're going to be unbelievably hesitant to lower rates. They're going to hang on and say, listen, we don't want to lower too early. We don't want to create more inflation. And so I think they're going to wait too long to stimulate, and we're going to have a very, very tough recession by the second half of 2023. The Russia invasion, the supply chain, different things like that created additional headaches for the Fed. But, if you're just looking at them bringing down inflation, you give them a good mark for that. But you also have to ask yourself, why was inflation such an issue? Could it be that they printed trillions of dollars and had interest rates at zero for so long a period? I would tend to agree. And I think that, it's easy to say, oh, they get a B+ or an A for getting it under control. But it's like, well, they are the ones that created the problem in general in the first place, right? So again, that's a tricky one. But this is the kicker on inflation, is that bringing inflation from 9% down to 5 or 4%, that's the easy work. That's like, if you have to run a mile, maybe the first half, 3/4 of the mile, we're all doing all right. It's the last little bit from 4% to 2% that I think is going to be unbelievably hard to get to. And that's going to make it very hard for the Fed to stimulate in the future. Yeah, so really, I do see another very troublesome year for the markets. If we look at the charts here, this is the S&P 500. And the first thing I go to is this trend line here. If you connect this high to this high here, which is the last two, the highest pivot, the all-time high, and the secondary high, and just stretch that down, the market has had very much trouble getting through that line. And you can see that again, in the near term, we're starting to break down again from that level. So to me, I look at this market and I say, okay, has the market fully factored in a recession? Has it fully factored in the fact that it's going to be a longer recession? If you think about it too, the economy has been in overgrowth mode for such a long time due to stimulus, it means that we almost need a long period of undergrowth to bring it back to the mean, right? That the average for the longer term growth. So I have it penciled in that probably in the first quarter of 2023, we're going to head down to about 3,400 on the S&P 500, which brings us to the pre-COVID high just before the big dip on COVID. And then I actually think that there's a longer trend line here that we can actually go back literally years. And I think this will be my target for 2023, that I do think we visit this 3,000 level on the S&P. So that puts us down 20 to 25% from current levels. And I think, again, that's really where I would start to get interested, maybe potentially buying a little bit.
With this in mind, knowing that we're crossing a deep recession with inflation levels that we haven't seen for a while, what's the best way to approach the markets?
I've been a trader for 20 years. So for me in this market, I'm what I call a swing trader, which means when the markets flush sharply, I buy key technical levels, and then I don't stick around too long. I might hold it for a day, a couple days, a couple weeks, but I'm looking to sell into the pop, as in bear markets, we ultimately will go lower. So I think that's one type of investing, but it's not for everyone. Needless to say, if you work a 9 to 5, it's very hard to follow the markets very closely. So I think if you're that type of investor, you start looking for safe assets, right? You kind of move your money into maybe a little bit of gold, a little bit of silver, where in the very least it'll be protected. And I think even gold could give us a return in 2023. And I even think there will be a point where some assets, maybe a very small percentage, can go into Bitcoin when it finally bottoms out. I do anticipate a bottom in 2023, finally, in that asset. Again, how much it goes up from there, we'll have to see. But I think that, again, each person has to kind of think about from themselves. But I definitely wouldn't be like buying every dip right now in Apple or any of these others. Understand that bear markets get uglier, and we're just in probably the beginning stages of it.
And what about Bitcoin? Is it suffering from macro? Let's hear what Gareth has to say about FTX and what's needed to get it on the right track.
I think the FTX scenario, first of all, horrendous for investors that are losing or have lost their money. But I do also think it was the kick in the pants, if you will, that the regulators in Washington needed to get something on the books. When you get that many people to get hurt, and also big money got hurt, which is kind of the first time I would say that institutional money really took it on the chin. And so I think that that's also going to push for regulation. And I think this is going to be the best. I know everyone was against it when crypto was rocking, but this is why you need regulation. You need rules. You need transparency. Otherwise, unfortunately, there's always bad apples that are going to do shady things and end up robbing people. So we get that regulation in the door. And then once you have transparency, big money can actually invest knowing it's somewhat safe, right? It's still the investment. It's still risky investment, but at least they're not going to get their money stolen. So I think that's the key there. It's really a crazy scenario, but I liken it to the Lehman Brothers collapse. The Lehman Brothers collapse in 2008, because again, very similar in Lehman wasn't doing shady, like illegal stuff, but they just over leveraged themselves quite a bit. And again, you have the same sort of kind of panic and sell in the crypto markets that you got back then. And so again, for me, I have it priced in that Bitcoin probably continues lower. Maybe as low as 9,000 is kind of my key target right now. But once it gets there, I think it's going to coincide with regulation coming out. And then I think you actually start to see a move back up in Bitcoin. I mean, things that I would want to see would be like FDIC insurance, where, one of my big concerns in my accounts is if someone hacks in and they steal my funds, it's gone technically. And I don't have any recourse about it. Once it's gone, it's gone. And I think the government needs to protect investors in that way. I also think you have to have, regular audits, like a lot of the same things that publicly traded companies have to go through. They have to show the books. They have to have it audited by a legitimate firm. There can be no hiding of assets or anything like that. What are they using? It all has to be revealed. Like if your customer funds are here, how much do they have to keep in reserves to protect the money that's on their books and stuff like. So all of these things would be really positive. I think we do run the risk of seeing the politicians over-regulate a little bit, but I think at the same time, that's a risk that you have to take in the crypto sector. Otherwise, the cryptos, like if you don't get investment, if you don't get regulation, crypto to me is almost like a dead asset, unfortunately. And so it's a big deal. You have to have it, because otherwise big money's not coming in, and then you're not getting Bitcoin to 100,000, you're not getting it to 1 million and so forth. If you get transparency, I really do believe it can go there.
And it's not over. Get ready for Gareth's new crazy Bitcoin price prediction. If you think 9,000 is bad, pay close attention to his worst-case scenario.
For me, it is a 2023 bottom. I've priced it out right now where it would be about May or June, and I'm doing that based off of the FTX debacle, matching it with Lehman Brothers. Lehman Brothers, the S&P fell for another 6 months and dropped about 45% from that event. And so if we have that same sort of shock to the system in crypto with FTX, and from that date, 6 months out, puts us in May or June of 2023, and 45%-ish from approximately when it happened puts us just below 10,000, around that 9,000 marker. Now, there is always the possibility it could go even lower. The worst case would be like 3,500 on Bitcoin, and then it would match up with Amazon's collapse in the .com. Amazon dropped 95% in the .com collapse, and that would put it on par. But that would be like a worst case scenario where regulation doesn't come out. And like, you know, for the most part, I think you will get regulation. And so it will draw in some bigger money at that point at 9,000.
Can crypto survive without transparency and hard regulation? Or, due to the recent events, those are needed more than ever, so the big players finally get in? Let us know what you think in the comments below. As always, we love to hear your thoughts on our videos. Thank you so much for watching. Please remember to leave a like and subscribe to get premium content like this every day.